Hey everybody, it's Isaac Presley with Cordant Wealth, and this is your Q1 2023 market recap. A bit of excitement in the first quarter with a couple banks failing and the subsequent market fallout from that. Also, inflation coming down in the quarter, which was good news that continues to fall. So, in this market recap, we're going to tell you what happened in the first quarter and give you our outlook and tour of the market for the rest of the year. So, stay tuned for that. Okay, overall performance in the first quarter was positive. Equity markets up across the globe a little bit more than 7%. Obviously, you can see a big start to the year through February falling off as markets and investors started to get nervous about the banking crisis that unfolded really quickly and seemed to resolve itself pretty quickly, and then a rebound there at the end of the quarter. Overall, like I said, pretty much markets up across the board. So U.S. markets, international markets up a little bit more than in the U.S. Emerging markets, real estate, and bonds also up in the first quarter. For U.S. stocks, growth stocks kind of rebounded last year. Value outperformed growth by about 10% on the year. Growth stocks actually outperformed in the first quarter in the U.S. A similar story internationally. Growth outperformed, and one thing to note here is the U.S. currency, the U.S. dollar, actually depreciated a little bit in the first quarter, which actually helped international returns, at least on a U.S. dollar basis. So that's finally some good news on the international investing front. Same story, emerging markets, growth outperformed, but a much tighter spread between growth, value, and large and small cap in the emerging market space. Commodities down a little bit in the quarter. Obviously, not good news for commodity investors, but in terms of inflation, that's actually some good news as commodity prices continue to fall as inflation comes down across the board. So, shifting gears a little bit from what happened in the first quarter to how things are positioned for the rest of the year. So, we're going to go ahead and take a look at the US market, value and small cap stocks, look at international stocks, and then look at bonds as well. So, despite a quote unquote good 2022, which saw value outperform growth by about 10%, stocks were down across the board last year, but value did outperform growth last year. Despite the good last year, value is still relatively cheap when compared to growth. So you can see a little bit under its long-term average in terms of the difference between growth and value. Came back some last year, but still looking pretty cheap relative to growth. In terms of small cap, another opportunity here. Small cap stocks are cheap relative to large cap stocks. Pretty cheap, actually, close to a 2 standard deviation difference relative to what the average valuation spread. So in the US, value stocks still look attractive and small cap stocks look attractive. From a bond perspective, bonds had a very rough year last year, really historically rough year last year as interest rates came up. The good news is interest rates are now higher and kind of yields are back. So going forward, this should mean good things for people that are invested and have an allocation to bonds as yields have really have come back and are offering some attractive yields there. We mentioned the US dollar earlier, and it's been pretty strong of late and near a 20-year high. The good news is for anybody that's investing internationally, which is going to be most of our clients, if the US dollar either stops strengthening, that's been a headwind on any international investing, or if it actually starts to depreciate or move back to its long-term average, that's actually going to be a tailwind to international investing. So a couple things to note there. International investing is actually a diversifier to the US dollar, right? If the US dollar is actually falling, that's actually helping your international investments. And the other thing to note is just, these things go through cycles. The US dollar wouldn't be consistently expected to continue to strengthen. And so that tailwind at some point will come off for international stocks. Now, speaking of international stocks, they remain cheap relative to the U.S. market. So uh, last year we saw them do a little bit better than the U.S. markets, but they're still cheap. So we're looking at a couple different things based on earnings, price to earnings ratio. You can see the lower the number there, the cheaper international stocks are relative to the US, and a pretty big difference in terms of dividend yields, so a pretty high difference in terms of dividend yields for international stocks versus US stocks. Both of these charts are from JP Morgan, and both of these are, a different way to measure the relative value of these two markets against each other. The other thing to note when it comes to international stocks are value stocks there are cheap relative to growth. So same story that we see in the U.S. An opportunity there. International stocks is value stocks as well are cheap relative to the growth stocks in the rest of the world as well. So that's a quick recap of everything that happened last quarter and a quick walkthrough of just how different areas of the market from US value stocks, US small company stocks, bonds, US currency, and international markets are looking for the rest of the year. So hopefully that's helpful. Look forward to talking to you next time. If you have any questions, feel free to send them in. We'd love to answer them next time.